Hey, good morning, everybody. Thanks for joining us today. Hey, as we look at the economy and what happened yesterday in the marketplace and what may happen today. So hold on just a minute. Dave will be with us shortly and we will continue our discussion.
In your 401k this morning, and having one of those days. Yesterday, I didn't get a chance to follow the markets during the day as things happened. Got off work, went home, looked at it, and said, "Holy crud! What the Sam Hill went on?" We started out pretty green and ended up turning south for the whole darn day. Let's find out what happened. Downtown Sebring we go. The offices of Statler Financial Services, where Phillip Statler's standing by. Phillip, I picked a bad day not to watch the news ticker, didn't I?
You did, Dave. I mean, man, you and I talked yesterday morning and we thought this thing's going well. So who would have thought that we would have ended up where we ended up yesterday? Because all things looked to me and looked to you like it was going to be a pretty decent day.
Yeah,
But
everything we saw came out pretty much was as predicted. No big surprises on the horizon. We were optimistic about the trade deal possibilities with China, and then the government did their 10 o'clock data dump, didn't they?
yeah, they did. So here's what came out yesterday after you and I spoke. We had construction spending numbers come out, we had personal income, and we had total vehicle sales come out. All of them were disappointing. Construction spending was estimated to go up by 0.2%. Instead, it went down by 0.6%. Personal income was expected to rise by 0.4%. Instead, it went down 0.1%. And then when it came to new vehicle sales, we missed by about 0.3% there also. So those were three macro numbers that that the traders just didn't like yesterday.
And pretty much hit three primary sectors straight in the slats. I mean, to put it in delicately, consumer spending affects discretionary consumer income affects discretionary income, and that means retail. Housing, obviously, something we're watching carefully, and then we hit the automotive industry as well. We ended up with a 206-point drop in the Dow yesterday, almost 18 down on the NASDAQ, and the S&P was down by the better part of 11, and that was exactly the opposite way you and I saw it in the morning before the opening, right?
Exactly, Dave. So we really thought that yesterday was going to be a great start to the week, and it just didn't end up that way. Like I said, it doesn't take a lot for the traders to get a little uncomfortable, given especially we talked about yesterday how, tomorrow celebrates the 10th anniversary, supposedly, of this bull market, depending upon how you calculate that bull market. And so I think people are really, it doesn't take much change in the wind for people to change their perspective.
Absolutely, and no matter how you calculate the starting of the bull market, fact of the matter is that old phrase, "What goes up has to come down." Nobody's repealed the business cycle yet, so consequently, everybody knows we're going to have at minimum a flattening out at some point, and we don't know when, and that just instinctively has traders nervous. Witness the fact that we've had two pretty substantial corrections just since the holiday season.
Well, yeah, and you alluded to a little bit yesterday. Sell the news, buy the rumor, and so I think we're seeing a little bit of that today or yesterday anyway. I think that the whole trade deal, seemed to be very positive, and so I think people are using that too as an opportunity to take some gains.
Absolutely. And we're still waiting to see what the unemployment rate looks like because of the way the month fell. This time we can't even blame the government shutdown. Just the month starting on the 1st at the end of this week, we'll get that unemployment rate that always is a market mover. So this has the potential of being kind of an upsy downsy week, doesn't it?
Yeah, it really does. We got a lot of things coming out. I mean, today we have new home sales are supposed to come out. I don't have a time on that. It didn't come out at 8:30, so I'm assuming it's a 10 o'clock deal that's going to come out. With this government shutdown, Dave, everything's just kind of sporadic compared to when we used to get things before the government shutdown. So I'll be glad when they get back on an even keel.
It really will be. I mean, some of the 10 o'clock reports don't come off until 1:30 in the afternoon, so we're all sitting back and going, huh? And that number probably is going to be a bigger market mover than it would be otherwise just after yesterday's housing report. The home construction numbers were kind of interesting, especially in light of Home Depot starting out the morning by saying, hey, we're expecting a pretty good quarter. And they said they're going to add 80,000 spring employees. So at the very least, the do-it-yourselfer stores are doing all right.
Well, I guess they have to gear up, right? Because Home Depot, I guess, probably has two seasons, right? They have Christmas season when people are there buying things for dad and that type of thing, and then they have the spring season when all the people up north kind of uncover from the snow and get back out there and start buying things to help their cause there.
Understood. And Home Depot does supply an awful lot of new construction products as well. So 80,000 new employees, even allowing for the fact that it's a seasonal hiring binge, is always good news. The other news item that I'd responded to was China actually put out a gross domestic product projection. We've been all concerned that China might actually be entering a recession. One always has to keep in mind that China's population growth rate, 6% growth, is not exactly what they had in mind, but at least it's not shrinkage when they said their GDP was going to go up by 6% this year.
Oh, yeah, exactly. So, we've talked about China before and how they kind of control their numbers, and they don't let outsiders see them. So, one of the things that always concerns us, and I don't know, I haven't ever looked back to do this research, but has China ever said they're in a recession? Or have they always said they've got some growth, just not as much as they want? And that'd be interesting to know. And that's just something kind of off the top of my head. But
I think you're probably making a really valid point, because when the Chinese stock market tanks, all the government needs to do is say, guys, we really think you ought to buy something. And it's amazing how fast that can turn, right?
Exactly. So, and their numbers are down because they like that number to be 7, 8, 9%. So don't get me wrong, it is down, but how valid is that number? That's the question.
Understood. We know it's in a slowdown, but it's interesting anyway that at the very least, in China, numbers always come in as expected. Otherwise, heads roll, and that sometimes is unfortunately a literal point. But it's interesting at the very least that they're saying they are slowing down, but they expect to grow, and we'll kind of let it sit at that. The actual number may mean nothing. Still the end of earnings season. A couple of household names reported, and actually came out with some good news for at least one of them today.
Well, we did actually for a couple of them when it came to retail. Target came in. They beat by about a penny a share. Their revenue also was ahead of forecast. And one of their key components is same-store sales. And they increased by 5.3%. And that was about 0.2% better than was expected. And they gave better than expected full year earnings forecasts for the year. So they're trading up nice today, about 6% this morning before we open up.
3 for 3 on Kohl's ain't bad, or on Target ain't bad. And I looked at Kohl's and I saw a 6-cent beat on earnings per share. So we start out with good news on that side of the retail front too.
Yeah, we really do. And they beat on revenue also. Their same store sales increased by 1%. During the quarter, which was above expected. They were only expected to go up by 0.3%. So we see Kohl's doing well too this morning. They're up about 5.6% before we get started. And then the last one I really have today is Salesforce. And for those in the business community know what Salesforce is. They're a big CRM, which is a contact management sales program. But they beat consensus estimates by 15 cents a share. So really good. Revenue also was above what was forecasted, but the stock's under some pressure this morning because they're giving weaker than expected outlook for this current quarter, and so they've gone back green. When I looked at them earlier, they were red, but right now they're up about 0.5%.
That's a big change. I had them toward the top of my big loser list when you started talking about them. So that there's some sort of a change that happened with the investors real quick, didn't it?
Yeah, it did. So somebody must have dug into the numbers a little bit more, maybe. Hey, on the other part, I've got, we talked about Hertz last week, and their earnings were pretty good. I didn't realize this, but Carl Icahn, the big hedge fund manager, investor, he owned a 35% stake in Hertz.
I
And
do remember that now that you mention it. He's a name that's kind of faded back into the woodwork, and we haven't mentioned him in quite a while.
but he reduced his stake in Hertz. I guess he liked what he saw last week and decided to take some money off the table there. So he reduced his ownership by about 7%.
Take the profit and run, Carl.
Yeah. Yep.
He was famous for that in the 80s too, wasn't he?
Well, yeah, and he still is. I mean, there's been several companies that you and I don't know much about that I've read little blips and blurbs about him going in and making a stink on the board, trying to get some things accomplished.
He was famous for doing that. He didn't necessarily take them apart and sell them right away. First, he went on the board and screwed them up, and then I don't have a lot of patience for board raiders. Can you tell?
Hey, it's all about making money. So he was there to try to make his stockholders money, and he's pretty good at it.
That's true. Setting the table again for this morning. It was an off day on Wall Street yesterday, to all of our surprises, after the government put some negative data on us. 45 minutes before we open up this morning, Phillip, have we got green ink to talk about today?
Dave, we do have mostly green ink this morning, at least in the indexes, but it has trailed off from when I first looked at it this morning. The Dow's right now up $14. The S&P 500 is up $1.75, and the Nasdaq's up $1.25. So basically, for all intensive purposes, we're going to open even. If not, maybe even a little to the downside when that actual start trading money. We've got gold is down about 0.1% right now to $12.86 an ounce, and then silver's at $15.11 an ounce. And crude oil, man, it is trying to get back up to 57. It's at 56.79, up 20 cents right now.
So how do we get Venezuela is the only salvation of stabilizing our oil prices, right?
I guess so. I really haven't dug into much. Crude oil inventory comes out, I think, tomorrow. And so that may be a factor. I've read a few blurbs about how the fracking industry is affecting the oil industry here. So there's some different things that are happening in the oil industry.
It's kind of almost a whole nother language, trading in commodities, without a doubt. Overseas got mixed markets all over the place. Somebody told everybody to buy, so Chinese markets are up. Japan was off a bit this morning. Europe also mixed 45 minutes before we start trading. Phillip, somebody want to find out how to stabilize the retirement and make it productive for me and my family. How do I get a hold of you on the phone?
Dave, give us a call at 382-0037. Follow us online at statlerfinancial.com. And then follow us on Facebook at Statler Financial Services, where we're posting videos all the time. Like of this show every morning, we go back after we're done, we repost this show so people can catch it there if they miss us. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
And streamed at newstalk730am.com, because us is in the 21st century now.
Hey, and I appreciate that, man. Hey, have a great day, Dave, and I will talk to you in the morning. Thanks for tuning in today. I hope you enjoyed this morning's Morning with Dave and had a great showing there. Hey, if you need anything, keep us in mind. You can always call us 382-0037. Above you here, there's an icon you can click right there at Schedule Once, where you can go directly to my schedule and schedule either a phone call or an actual office visit, up to you, where we can sit down and chat a little bit about maybe some things that are on your mind. Keep that in mind. I look forward to talking to you again tomorrow. Take care.